Hi, this is Lara at Elliott Wave Stock Market with a free Dow analysis for you after the trading session dated Thursday 15th of September was over. I'm using a new charting package. This is Motive Wave, and I've been having a play with this and it works pretty well. I've got a couple of wave counts to go over. We'll start with my primary wave count on a monthly chart. This wave count sees this movement starting at this high here as a possible double combination or double flat correction. So we have a 3, 3, 5, the first structure in the double labelled W at cycle degree is a flat correction, and there's a reasonable ratio between this C wave and wave A. The C wave is just 371 points longer than 1.618 the length of A. I know that's quite a lot off, but they are spanning years, and the C wave is over 7,700 points, so that's just a 4.7% variation. I consider that acceptable. This upwards movement here, in contrast to this prior downwards movement, is very obviously corrective, and it's in a three-wave structure, and the trend channel that we draw around it has been very obviously breached by downwards movement. So the three-wave zigzag that I have labelled X at cycle degree is over, and for this wave count would be expecting further downwards movement. So the zigzag that I have here labelled cycle degree wave X is over because the trend channel is breached, and the next wave down would be the second structure of either a double flat or a double combination. So wave Y at cycle degree can be either a flat, a zigzag or a triangle. It's less likely to be a triangle than the other two. Let's have a look at this on a daily chart. This is the end of cycle wave X, and we have a 1, 2, 3, 4, 5 wave impulse complete down here. It has a truncated fifth wave. So I've labelled this intermediate degree wave 1 within cycle degree wave Y. We will expect to see a truncation after a third wave, which has travelled too far too fast, and this certainly could fit the bill. This third wave has a nice ratio to the first wave at blue or minor degree. It's just 171 points short of 2.618, the length of blue wave 1. I know that's quite a lot off, but the third wave is over 2,300 points in length, so again that's an acceptable variation. It's less than 10% off. So that's over 2.618 the length of one, so it is a particularly long wave, and it did have a lot of strong downwards momentum. We may have seen a truncated fifth wave to follow it. My main reason why I want to label this as a truncated fifth wave is from this high to this low, we can see a nice 5-wave impulse, and it's really hard to see that as a 3-wave structure. So this is where the 5-wave structure down ends, and this is where the correction begins. So we have either ABC or WXY. I'm looking at this piece of movement in two different ways. Taking you to the first of 2 hourly wave counts. I'm not going to do this on Motive Wave. I'm going to do this as I usually do, because I can fit the labels in and I can use the e-signal data. I can't get that through on Motive Wave yet. I'm still working on that. So far, within the second wave correction, this upwards movement can certainly be seen as a 5-wave structure. I actually like the subdivisions here a little bit better around this little piece of movement. From here to here, I think this is a complete 5-wave impulse for a third wave, and this is an ending fifth wave to end wave 3 pink. I haven't put the subdivisions in here, but this is a 1, 2, 3, 4, 5 ending expanding diagonal for the final fifth wave at pink degree. So we have a 5 up here, a 3 down here. We're looking for the end of a 5 up here. So far we have a nice 1, an expanded flat for 2, and now within 3, 1, 2, 3's not quite over. I'll have a little fourth wave, further up to go, etc. Any further downwards movement for 4 green may not move into 1 green price territory. The very short-term invalidation point is 11,377.10, sorry. Thereafter, after the third wave at pink degree is complete, the following fourth wave correction at pink degree may not move into wave 1 pink price territory. That has its invalidation point a bit lower at 11,138.54. So far, upwards movement is reasonably well contained in this trend channel, which should be redrawn when the third wave ends. At this stage, it's just a best fit. I've drawn it from the start of this movement to this low, nearly touches this low as well, and I've placed a parallel copy up here with a little bit of overshoots here. We may expect price for the end of the third wave to probably overshoot this channel on the upside. When it's all done, wave C blue may still be a few days away, the end of it, and it would reach equality with A at 11,740.19. So that's the most common ratio between A and C, so if it's going to have a ratio with A, that's the most likely place for it to end. Although it doesn't have to have a ratio with A, and it could also possibly be truncated. If this channel is breached by a very strong downwards movement, then we have to suspect that the second wave could even be truncated and the third wave down could then be underway. For this main hourly wave count, all we need to see is from this low to the high, a complete and satisfactory 5-wave structure. It's going to be an impulse. And we do actually have that. 1, 2, 3, 4, 5 could technically just be over here. It would be a really significant truncation though. I expect the probability of that is very low indeed. I am expecting still further upwards movement is most likely, and so that's what I'm charting. Alternatively, I have an alternate wave count on the hourly chart. For the Dow, wave 2 black may be subdividing as a double zigzag. This upwards movement here does have a pretty good 3-wave look. However, I don't like the subdivision here. It's seeing from this low to this high as a complete impulse for a third wave. It's much easier to see it over here on the 15-minute chart. But I could be wrong and it could have ended there. And this piece of upwards movement, I'm considering this alternate because it really does have quite a good 3-wave look to it. Here we have a zigzag, a 3 in the opposite direction joining the double is labelled X. And here we have the start of the second structure in the double, A, B, and we need C upwards to complete the second structure in the double is labelled Y. The purpose of a double zigzag, and what W is a zigzag and Y so far is unfolding as a zigzag, so this is a double zigzag and its purpose should be to deepen a correction. For that reason I would expect wave Y to most likely move beyond the end of W. In this instance, failure to do so is not correctly termed a truncation, but that would look pretty strange and it would significantly reduce the probability of such a wave count, because then the double zigzag wouldn't be achieving its primary purpose to deepen a correction. I have 2 targets and this lower target has a much lower probability. At 11,501.54, wave C pink within the zigzag for wave blue will reach 1.618 the length of A. The second higher target has a higher probability. At 11,815.32, wave C pink will reach 2.618 the length of A pink. I've drawn this trend channel around the most recent upwards movement in exactly the same way. And for this wave count, this is how it should continue to be drawn. From the start of A to the end of B, and a parallel copy on the high of A. When we see significant movement below this channel on the hourly chart, at least 1 or 2 full hourly candlesticks below and not touching this channel, at that stage we'll be using this channel in the manner Elliott intended, and we can use it as confirmation that the zigzag for wave Y blue is over, and that wave 3 black down would then be underway. It's extremely unlikely, if this wave count's correct, that wave 2 black would continue further as a rare triple zigzag. The rarity of that structure means the probability of that happening is very low indeed. So a trend channel breach here on the hourly chart for this wave count would be confirmation, or very strong confirmation, that 2 is over and 3 is underway. Final confirmation from a trend channel breach on the daily chart would be the safest way to approach this wave count. I'm going to have a look at my alternate analysis now. This is on, let's go to a monthly chart to start with this one. It's also possible, just going back a little, this is where it starts. It's also possible that instead of A, B, C, W, X, Y, we have, and most Elliottians will be familiar with this one, A, B, and this is where cycle C starts, and it has to subdivide a primary degree into a 5-wave structure, and it looks like it's subdividing as an impulse because this first structure down here is a 5-wave impulse. So primary 1 is a 5, primary 2 is a 3. Primary 3 can only subdivide into a simple 5-wave impulse. Primary 3 must make a new low beyond the end of primary wave 1, so it's got a long way down to go. I've given this first 5-wave structure down degree of labelling an intermediate degree because the durations of the waves fit that quite nicely. We might also possibly want to move it down 1 degree. It might actually be a minor degree. We'll see how this one unfolds in coming days and weeks. So far, this one is expecting the next movement down from the Dow to be very, very strong indeed, a 3rd wave within a 3rd wave. So really the only differentiation between my primary and alternate analysis is the expected wave behaviour for this next downwards movement. Both of them are expecting downwards movement. Let's have a look at this one on the daily chart. The subdivisions, the degree of labelling, and the 2 alternates for the hourly are exactly the same as my primary analysis. So we have a 1, 2, 3, 4, 5 wave structure with a truncated 5th wave complete here, and either ABC or WXY for wave 2 at intermediate degree, which can't move beyond the start of 1. The invalidation point is also the same. So it looks most likely that we're going to see probably another couple of days or so further upwards movement from the Dow to complete a zigzag or a double zigzag for a 2nd wave correction, which is probably going to be relatively shallow. 2nd wave corrections are usually deeper corrections, but in this case we may be within a primary 3rd wave, and that may cause corrections to be shallower rather than deeper. When that correction's over, the next movement from the Dow coming up probably in a couple of days or so may actually take us by surprise though, and it could be very, very strong to the downside. That's all for me with your Dow analysis, and I hope you're all having a great day.